The Indian stock market in June 2025 is seeing an exciting shift, and it's not the Nifty 50 that's stealing the spotlight. It's the mid-cap and small-cap stocks that are powering ahead, delivering impressive returns and outperforming their large-cap counterparts by a wide margin. The data speaks for itself. The Nifty Midcap 100 gained 6.1% in May 2025, while the Nifty Microcap 250 soared 12.1%. In contrast, the Nifty 50 advanced just 1.7% during the same period. This stark difference has caught the attention of both retail and institutional investors, many of whom are reallocating funds into these fast-moving segments of the market. So, what's behind this small stock surge? Several factors are converging to make mid-caps and small caps more attractive in the current environment. First, there's a strong uptick in domestic demand, partially driven by pre-festive season consumption and a promising forecast for the monsoon. These trends benefit companies that rely on domestic markets, precisely the profile of many mid-cap firms. Second, the Reserve Bank of India's surprise 50 basis point rate cut on June 6th, which brought the repo rate down to 5.5%, has made capital cheaper. This move is especially significant for mid-sized companies that typically depend more heavily on borrowing for expansion. Another key driver is the strong flow of funds from domestic institutional investors, DIIs. In just the first week of June, DIIs invested over Rs 25,510 crore into equities, with a notable tilt toward mid-cap stocks. These investors see the potential for superior earnings growth and valuation upside in these stocks, especially as global uncertainties continue to weigh on large-cap multinationals. Mid-caps, in contrast, are often more insulated from global shocks, and are more closely tied to India's domestic growth story, making them ideal candidates in the current scenario. To visualize this divergence in performance, consider the trajectory of two benchmark indices. From May 1 to June 6th, the Nifty Midcap 100 jumped from 54,000 to 58,000, while the Nifty 50 moved from 24,300 to just 25,100. The chart clearly shows a steeper upward trend in the midcap index, reflecting heightened investor interest and momentum. This is not just a flash in the pan, it's part of a broader re-rating of mid-sized businesses across sectors like IT, healthcare, infrastructure, and industrials. Let's now focus on some standout stock stories that are capturing analyst attention and seeing rapid re-ratings, beginning with Redington Ltd. Redington, a tech distribution and services company, made headlines after its Q4 FY25 earnings release. The stock surged 43% in just 3 trading sessions to reach Rs 299.40 on June 6th. What's fueling this rally? Redington's business is evolving rapidly. It's not just distributing Apple and Dell products anymore, it's building a strong portfolio around cloud computing, digital distribution, and AI infrastructure services. With revenue up 26% year-on-year and a lean valuation at just 15x earnings, compared to the industry average of 25x, it's clear why investors are excited. Analysts at Anand Rathi have given Redington a target price over 350, which offers nearly 17% upside from current levels. What also works in its favor is the long runway for digital transformation in India and other emerging markets where Redington operates. However, investors should also be aware of risks, such as a potential slowdown in global tech hardware spending or supply chain disruptions that could impact margins. But overall, the fundamentals are strong, and the company's ability to scale digital services could unlock even greater value in the coming quarters. Another stock in focus is Fortis Healthcare, which has been on a steady upward trajectory, gaining 60% in the last 6 months alone. The stock hit a near record high of 731.35 on June 6th, buoyed by strong operating metrics and expansion plans. Fortis, one of the largest private hospital chains in India, is riding the wave of post-COVID healthcare investments, rising medical tourism, and increasing demand for quality private healthcare services. With an ambitious plan to add 2,200 beds by FY27 and operational margins consistently above 20%, Fortis is showing it has both scale and profitability. Axis Securities recently initiated a buy rating on Fortis with a target of Rs 850, suggesting a further 16% upside from current levels. Institutional investors are also bullish on the stock, citing India's long-term healthcare demand and a relatively under-penetrated private hospital market. Still, one must consider the regulatory environment. Pricing regulations, insurance payment cycles, and policy changes can impact revenues. But Fortis's strategic expansion and stable financials make it a compelling play in the mid-cap space. While these examples are promising, investors must not forget the risks associated with mid and small-cap investing. These stocks are inherently more volatile and less liquid than their large-cap peers. Price swings of 10 to 20% in either direction over a week are not uncommon. The Nifty Midcap 100, for instance, is still 16% below its all-time high. This means that while the long-term potential is attractive, the journey may be volatile. Investors should avoid the temptation to chase short-term gains and instead adopt a more measured approach by diversifying across sectors and market caps. One effective strategy is to maintain a core allocation to large caps, companies like HDFC Bank, Infosys, or Reliance Industries, that offer stability and steady returns. Around that, build exposure to quality mid-caps, like Redington, Fortis, or even others like PG Electroplast, Suzlon Energy, and KPT Technologies based on your risk appetite. The idea is to balance growth and safety, especially in an environment where interest rates and inflation dynamics are evolving. It's also important to do your own due diligence or consult a registered advisor before investing. While analyst targets provide helpful benchmarks, they are subject to change based on market developments, global headwinds, and company-specific factors. Keep an eye on corporate governance, promoter holding patterns, and earnings consistency when evaluating potential mid-cap investments. Now let's turn the spotlight back on you, our finance story community. We want to hear from you. Which mid-cap stock do you believe has the most potential in 2025? Are you backing Redington's tech journey, Fortis's healthcare leadership, or do you have your eyes on a different breakout performer? Let us know in the comments section. Also, don't forget to vote in the poll pinned on this video. Let's see which stock the community trusts the most. To help us spread the word and reach more investors like you, don't forget to hit the like button, share this video with your investor friends, and subscribe to Finance Story for more market insights.